Thank you very much for inviting me back. I appreciate it, David and Anka, and happy Thanksgiving week to everyone. Hopefully it's a profitable one and then a calming one for a little break, if you will. It's been eventful in the markets, and I wanted to come at this educational seminar as far as option flow. I'm a professional options trader. I am actually an analyst, educator, and trader. I support clients who do the same, actively trade for a living. I have both a retail and an institutional offering, so I'm using primarily my background in sizing up macro and fundamental with a mix of quant and intermarket technical sentiment. I use the whole modality of approaches to try and figure out this great puzzle of trading. And I do it in a live trading room. I have brokerage-triggered trade alerts, and I write for my clients, letting them know my thoughts on each of the areas that I think might create an inflection point in the markets. And I wanted to approach today from a standpoint of option flow. Those who trade stocks can still absolutely benefit from this education, and we'll kind of begin by giving you a background where you can find me. It's LeducTrading.com, and as I mentioned, I'm the founder, also Leduc Capital LLC, and my focus is macro to micro, and that means I'm using that kind of backdrop, if you will, of being a solid generalist, and then I'm keying in on particular trade setups for clients and for myself that are using technical entries for sure, as well as the option flow, and not unusual option flow that you might have kind of read about or seen in other presentations, but big option flow, the market structure of big institutional players to set the scene. I call it swimming with the current, then against it, and then drilling down to individual underlying assets, whatever they may be, treasury, dollar, okay, fine, precious metals, but also the beloved, if you will, momentum plays, Tesla, NEO, etc. So I am looking at the flow that is sector rotation, that's individual stock, and I am looking at it from direction. And then I want to kind of show you some examples of that in this presentation and answer questions, because I really think it's a little bit timely that we had such an eventful day today throughout lots of the EV plays, to the momentum, the big tech, FANG sell-off, to the continued value rotation. That's a lot of fun. So that's what I set up for my clients in my trading room. Basically, I just gave you a quick overview. Sorry, I didn't change the slide. I'm excited to kind of get to the examples, but basically I trade for a living. As I mentioned, I run a trader education service, and I am looking at 3 different time frames, which I really want to highlight because I know some will focus on day trading. They go to cash at the end of the day. That might be called chase in my mind. It's a few hours to a few days. A swing trade, which is really my bread and butter, is holding on to something for a few weeks. I'm using options primarily, but not always, stock as well. And that duration, if you will impact what I choose for an option tactic. We'll get into that. And I also love trend trading. So it's basically a big thing right now that we've got some potential trend reversals going on, potentially in like the oil and gas plays and other value rotation or anti-momentum, we'll get to that, trades. But the point is, this is something where I'm looking for inflection points and then staying with that trend for several months if need be. So 3 different time frames. I want you to I want to set the stage with that. Using options, but also stock, very much looking at anticipating volatility at inflection points that move a market, stock, currency, cryptocurrency, commodity, or interest rates. Got to add that crypto in there because that's been hot fire flames. So, and then again, I'm not just using option flow because I very much look at the macro backdrop of, the economic policies, yes, the geopolitical risks, the politics, as well as what's going on in extremes of sentiment, what's going on in the quant world, how hedge funds are positioned, how retail is positioned. So I do a mix, if you will, of that kind of the individual silos and smoosh it all together. And then ultimately it's a technical assessment whether to go long or short. But I definitely wanted to let you know that this is not just option flow and chasing anything that moves, but already having a thesis in mind and a chart set up that will match the option flow. So that's the actionable trade idea that I'm talking about in particular. So I'll skip this real quick just because I want to get to some examples, but when I'm talking about the macro and fundamental, it's very much, you know, policies lead price, earnings matter. But if you have this preponderance of what we call single stock gamma option flow, okay, you know, it's a big phrase. It just means that buying begets buying, selling begets selling, and there's a way to spy it in the flow of options before the price moves and while the price moves to stay with that current of trade. So then, you know, looking at the technical and such are, you know, patterns. I'm a pattern recognition gal. I'm very much using breakouts, you know, bounce at break upon pullbacks. I call it bottom fishing, stuff that's been basing for a long time and now there's some short covering, such as the energy complex right now, or even GameStop, you know, which has a 99% short interest. And they're rotating out of some of the FANG names and short covering is in play. That can set up some fabulous volatility or directional moves. And then I want to confirm it with options. So I want to share with you some of the resources that I use for option flow, and then how I put the data, if you will, and then how I put it in context and compare it with my intermarket analysis. So all of this is very much confusing when it comes to those who are new to options, but hopefully I'll give a little bit of a feel. You'll see it in the examples that I give. But ultimately, this is a sentiment play. This is a crowd psychology play, no question. The EV, I'm talking about, you know, the electric vehicle mania right now that is exploding, right? And the past few weeks and actually months, it's been basing and turning, and now it's, you know, again, out of this world of reasonableness. But the point is, that's a sentiment play. So much like the low float China plays were in 2007, just there's a penny stock kind of sentiment move into some of these sectors. That's separate from a value rotation, which is, we're going to talk about that. And these can continue, these trends, if you will, these moves can continue longer and higher and more extreme. And since most are, what most don't understand is that options are actually leading the flow of volume in the movement of an underlying. So in the past, equity has been the most traded volume. Now options are taking that place. They're a derivative. They represent value that allows for leverage, a lot of leverage, and people are trading options more than the underlying. So that's why I wanted to talk about that as well. So just a quick review, when I'm talking about option flow, I might be talking about Roku, for example. In the first 10 minutes, there was a day in my live trading room where we spied Roku had 40,000 contracts in the first 10 minutes. They were calls. And sure enough, it just exploded. I like that. It's a fun expression, but hot fire flames just means that out of nowhere, it explodes 4, 5, 6, 7, 8, 9, 10%. And it's being chased, right? And so that's why I call that particular setup a chase. It's based on an hourly time frame. It's 1 to 3 days. The options that I typically employ are 1 to 3 weeks. And it is very you know, like a car race. You got to be in the mood for it. It doesn't necessarily suit everybody's style, but it is very, very actionable. So the others are the swing time frames where you see positioning coming in the option flow. And it's not near-term stuff. In other words, near-term, we have weekly options expiration. We have monthly. We have leaps. There's all kinds of complicated tactics. But typically, the stuff that's coming in option flow can be seen as bullish or bearish. Sometimes it's a hedge. But for the most part, it is very clear, especially this year, that we've had, especially since the COVID lockdowns in March with the Robinhood traders, we've had a lot of chasing, which means they're buying the 7-day expiry options, the weekly options that expire on Friday, hoping for that big IV explosion. IV stands for implied volatility. And it has happened often. So we'll talk about that. So basically, this is a little bit on, you know, how I trade. That's not really the focus I wanted to do right now, but I wanted to definitely get into also market timing calls. It's hard right now when a market is just level upon level upon level, you know, moving higher. And right now we have kind of the opposite. We had a huge gap up on the Pfizer news 2.5 weeks ago, and then it was on a Monday, and then we kind of have gone sideways in the indices while certain sectors have exploded higher. So the thing that I like to do is size up what's called a factor rotation, and that is when growth rotates to value or value rotates to growth, and those stocks within that space can be very, very profitable to trade on a swing and a trend time frame. So that's what I like to do, whether it be bonds, whether it be the market. And what I'm doing is big picture, okay, big picture. I'm following what's called gamma. So gamma matters in option trading speak. That means that we basically have positive or negative gamma in the indices. So, you know, think the spiders, for example. And the quant approach is very clear. It's mathematically driven. It's based on levels. And when they get to a certain price higher, for example, there's more buying. And when it breaks down to a certain level, there's more selling. It's really that straightforward. However, this is not something that most retail pays attention to. So they don't really know why something's moving up. Why is Tesla so crazy high? Well, there are reasons structurally where the option flow, the size of the institutions placing bets, and the cumulative volume of retail traders coming in and placing bets forces dealers to cover and buy more of the stock, the underlying. So whether you're playing options or the stock, you win if you're on the right side of the trade. And you can see that in the option flow. So this is looking at the indices from a gamma standpoint, mostly. Think large institutional buy-sell programs plus lots of retail. And what's interesting, the most interesting about this gamma flow is that retail may not know what this means, but they have forced a whole new market structure by coming in with their, you know, $1,200 checks and being out of work or, you know, working from home and being able to trade and putting this money into, or in their focus and, you know, into trading has actually forced dealers. And by the way, retail is typically more bullish. So they are all in, for example, right now, fund flows show. And since this March timeframe, this has created this upward pressure, literally upward pressure and option flow. And the more calls that come in, the more dealers are forced to hedge by buying stock. And that creates this perpetual, you know, cycle. And it's cool if you understand it because you can make a lot of money trading it. Even if you think rationally, this makes no sense. Come on, Tesla, come on. NIO right now, based on market cap, you know, this is like $1 million per car that they're producing. That makes no sense. But euphoria isn't necessarily how do I put this? What we're trading is the market structure. The market structure is euphoric because they keep buying calls that the dealers have to hedge by buying more stock, which forces the price of NEO higher. Does that make sense? So I want to just kind of emphasize that there's a big old market that retail doesn't understand, which is the core of market structure is the market makers, the dealers, the big CTAs and quant funds that are involved in larger volumes, institutional size volumes. And now you've got the retail, lots and lots of small lots. You understand the lots are smaller, but there are many of them now coming into the market. This creates this market dynamic, which is right now bullish. And my thing is to figure out when it will slow and roll over. So it's not just about Fed liquidity, which is a macro thesis, you know, free money, a COVID vaccine, which is a sentiment play, you know, disposable income, you know, that creates more interest and more time in trading. It's really about what does the market tell me through option flow, both from the indices, their ranges, and obviously we break higher, break lower, pretty straightforward, and in the underlying stocks themselves. So at some point, this, we'll call it euphoria or mania in certain, you know, sectors will cool and will reverse, and we'll start to see it in put volume. But right now there's a tremendous amount of directional call volume. And we saw that in August very much with the FANG stocks, the Facebook, Apple, Netflix, Google, Amazon. And then it completely has fizzled out. We'll get to that. So here's what I mean. Here are some examples, okay? And I'm sure you might have some interest. Let me know and I can, you know, pull up a chart. But for right now, this was something that I sent out in August, end of August 27th. A chart pattern is also very important to me. So I want the flow to, first of all, the option flow to be representative of large size. I want the IV to be rising, which is the implied volatility, which makes a directional call or put, but in this case, a call worth more. I want the pattern to support the direction. I want the market, the current of the market. In other words, is NASDAQ going higher? Right now, small caps are racing higher, and NASDAQ is actually weak. But back in August, NASDAQ was hot fire flames. Tesla was hot fire flames. And it was really easy, quote unquote. You got to have conviction to actually put money into it. But the point was, it was easy to see that there was unusual option activity. I had actually put this out, and I do this in my trading room all the time, but this was a very nice pullback. It's been condensed, but the point is it stayed on a daily, by the way, this is daily time frame, above the 21 day, which if you're into swing trading and trend trading, you want a stock to stay and close above the 21 day. And then it started to break out. I not only saw the wedge about ready to break out, but I also saw very large unusual option activity at the $1,800 strike. 1,800 was way up here. And we're talking large. So 5 million, 10 million, you know, cumulatively, there was a ton of out of the money call buying. And August represented a very big directional flow in the FANG stocks. Apple had its biggest, you know, call buying ever. And it's, of course, an institutional name, but it was still being played by retail like a Tesla. And then we got up to the 1,800 in Tesla, for example, and we calmed down a little bit. It really got quiet. There wasn't this constant hit of out of the money call buying, and it calmed down a little bit, overshot the 21 a little bit, and then right then at the $1,400 level, when Tesla was 14, by the way, before its stock split, I should say that again, that we had a big stock split up here when Tesla hit 2,500. Anyway, I saw a false breakdown and a wedge ready to break higher again, and unusual option activity is this, UOA. It's just my, you know, shorthand for clients. It was at 2,000. So there was, again, some very, very large clients coming in that wanted this higher, that expected this higher, and dealers would cover buying the stock. It later came out right when Tesla hit this 2,500 and did their stock split, and then it softened, that SoftBank, a big institutional player obviously in Japan, had been using this single stock gamma option flow technique with their large size to facilitate the call buying and then the dealer hedging. But it wasn't just SoftBank. No. There were many small lots. In other words, a 10 lot, a 15 lot, a 100 lot. So it wasn't just millions of dollars in call buying, one buyer. It was millions of small contract buying, which denotes retail. So this ultimately did tag, and then it came back down, softened a little bit. And then recently, after chopping around sideways for quite a bit, the Tesla bulls were proven right. Tesla last week was actually admitted into the S&P. That's a big deal. So inclusion in the S&P is typically reserved for profitable companies. And honestly, Tesla, if it didn't have its EV credits, wouldn't qualify. And it certainly doesn't have 4 consecutive quarters of profits. But nonetheless, they are a, forgive me, huge honkin' stock. And it's 400 billion valuation that they, the committee decided they need to be in the S&P. That's how it is. So now that the pension funds and many funds, institutional funds, are passive investing, right? They have already Tesla on their books, and they have passive, SPX exposure. They will need to buy Tesla. And this setup, when I was doing a guest captain interview, I do on my site, every Tuesday and Thursday. And in particular, Tuesday, I have Jonathan Gibbons of VigTech, and he and I see very closely eye to eye with flows. I'll show you his platform in a minute, but the point is, we were talking about Tesla and the inclusion into the S&P. They were about 440 at the time. And I said, to me, it's pretty clear the option flow has turned bullish again. So, many were thinking, oh no, they got to sell, it's so much to absorb, which it is, by the way, but the inclusion date was December 21st. So my thinking was the institutional fund flows would require Tesla stock be purchased into that 12/21 inclusion date, which meant dealers would have to front run these funds. They would have to buy into the event and sell at the event. So in that interview, I said, Tesla's going to 500 sooner rather than later. And the next day it went to 500. So I could see the option flow. I had a thesis and I had a chart set up that said, it looks bullish. So that's what I mean by having just option flow isn't enough, right? And there were many who said, no, Tesla's going to have to be sold now. No double dipping, if you will, with the large firms. And it's going to be a lot of money that basically the S&P, the valuation, if you will, is going to have to absorb to balance itself. And it's going to be choppy. So anyway, the option flow had turned bullish. The institutional fund flows would definitely require Tesla be purchased. Dealers, I thought, would need to front run, which means, they're buying the stock. Chart was supportive of higher technically. Market was supportive of higher technically. And Tesla is now, hold on, where am I? Not even 1 week later. I mean, literally, it's 521.5 is where it closed. So the big move has continued. So I just want to kind of, let's see if I can emphasize that. Let's see if we can also see this. Okay, good. You're still on my screen 3. All right, so here's the Tesla chart, right? So you can see, and I hope this is visible to you. Here's open interest. What I have done is I have a stock up here, which is on an hour, a day, and a weekly time frame, okay? And originally I thought, wow, this is getting pretty weak. Maybe it's going to break here and roll over. It did not, because it got the announcement of the S&P inclusion, and it rallied higher, a good 10%, 12%, came back very shallow and then just shot straight up, right? So here was the 500, ish level. But what I want to show you isn't necessarily just the chart formation, which is still very bullish. This was the 5-for-1 stock split. If you can see that right here, still stayed above the 10-week, which by the way is very bullish. Then it formed a nice wedge for higher, but at the time it was actually rolling over. It was very weak. So it was down by this 900 before the announcement. Anyway, this is what I really want to show you. This is what I show clients every day in my live trading room, in addition to the flow that comes in for options, which I get from different sources, and I'll share that with you. So here's volume for today, right? They're chasing. This is a near week. You can kind of see this. This is this week, next week, following week. This is a monthly. You get the point, right? These are the leaps. So that's option flow. And you can see how many, this is a few 100,000 contracts have come in just chasing Tesla today up 6.5%. So, and that's probably about 3.5%, 4% from the open. So they were just coming in. So open interest is what has already been put in open interest, right? You can see this right here, okay, across lots of different strikes. So leaps, this is January, December, June, okay. And now here is what happened just today. Ginormous, right? So this is what I'm sizing up, what's coming in for flow, not just near term, but also positioning. There was, for example, $5 million bet on December 24th, in the money, Tesla $500 calls. So that's, again, a bullish bet of size, not retail. So my point is that's one of the ways that I'm sizing up a chart. Obviously the market is bullish. Obviously the flow is very bullish, and we'll do this for some others as well. That's Tesla, and it doesn't look done. Does it look like, yes, it could pause? This happens to be a Bollinger Band. Could we have a sudden pullback? Maybe the market doesn't like the fact that Biden has picked Yellen. Doesn't matter right now. The chart is still bullish. It's above the 3-day. It's above the 10-week. It's broken out. The flow is ridiculously bullish. So what we're going to be looking for is when this calms, in other words, pauses, stops going up like hot fire flames every day, and then starts to turn and forms a type of reversal signal, also starts to get unrelenting put volume, because buying begets buying. The dealers are hedging, they're buying more stock, and the reverse can also happen. So I want to just show you kind of how that works. Let's see, I want to go back to my share because it just, oops, I don't want that. Hold on. There we go. All right, so that was my advice, if you will, Tuesday before the next day and a half, and the stock ran from basically that 400 level all the way up to 500 in basically 2 days. So this is an example also for those who might be a little bit more technically inclined, who really want to see this graphically illustrated in a chart. So I am a big fan of a site called Spot Gamma, just like it sounds, right? I'm talking about gamma. So I have, some really good quant traders and quant resources that just specialize in gamma flow. It's not necessarily stock specific. It's more the market backdrop. You want to swim with the current, right? So this, however, is one example where back in August, remember that chart I showed you where it broke out from a wedge and it showed very strong option buying at the $1,800 level, and then it calmed down for a few weeks, and then it showed very strong option buying at the 2,000 level after it had dropped to 1,400, and then it showed very strong option buying at 2,500. Well, this is what it looked like in August, this melt up in Tesla that went from 1,000, no joke, 998 to 2,500, just as I laid out for clients. This is how it looked, which is to say the melt up, there were many more calls than puts. And you can see that because this is just so far removed. So this blue line represents this big, big spread differential between calls and puts, many more calls than puts. Dealers were forced to hedge, and that's really all there's to say about that. The rest is history. All right, so Tesla made it into the S&P, and in the prior weeks, it did digest this ginormous move from 1,000 to 2,500, went through a stock split, you know, digested for several weeks. It was just a really nice, oops, sorry, I want to do this one. Just a really kind of, give me a second. Okay, so here's the 5-for-1 right here. And it just did this snaky thing, right? It was just working through. There wasn't a whole bunch of call buying like there was today or like there was in August. It was just kind of snaky. And then the 500 inclusion, and it breaks out of a Bollinger Band for those who might even be into that, you know, as far as a pattern. This was a snake with a breakout, but it was absolutely foretold with the option flow. So I hope that kind of explains a little bit where I'm going with that. So that was then. The gap between the call and the put gamma in August implied that there were a lot more calls at strikes overhead, and this drove dealers to aggressively buy the stock as it went higher. This was a chart that I provided from Spot Gamma. There's also another site which does a whole bunch of other things besides just Gamma. Oh my goodness, it gives you lots of learning opportunities. Jonathan, who runs VigTech.io, is who I interview every Tuesday, because they're tracking for sure the single stock gamma flow, and does a wonderful daily called The Juice, which I post for clients because it's so in keeping with my mindset. Like the gold, I've been short. I've been recommending gold short since August 6th. No joke. So this is breaking, right? And it's taken a while, but the flows are also in gold, all-time outflows. So they've gone into Bitcoin, they've gone into the EV plays, but the point is, this is a great resource. Spot Gamma is a great resource. Sang Lucci I use every day in my trading room. So let me show you, this is actually subscription for actual flow. It does not give you context. I do that for my clients in my trading room. So Planetar, I mean, this is a ridiculous one as well. This is a 200, I'm not talking about individual flow, okay? I'm just saying, for example, I'm looking at repeat suspects. So for example, check out Planetar, okay? PLTR, Planeteer, however you want to pronounce it. Y'all can see this is just straight up shot, right? And fundamentally, I'm not discussing or debating its merit at all in what price it should be. I'm pointing out the unrelenting amount of, we got some puts here, they could be selling, they could be, you know, hedging because it's up so much, but the point is, this has been hit time after time after time with lots of call buying. And case in point, you can see right here, this is the last one he just did, a $200,000 bet. So what I'm doing is I'm going through and I'm looking what's getting posted here and on VigTech. They're totally different sites. They're not related, right? Spot Gamma is only doing the gamma of the market indices, but I'll put that all together. It's all about option flow. So I'm looking through here and I'm looking, here's another $423,000 bet in NEO. Are they done yet? At some point, they might be done. I'm not paying attention to Delta, a $24,000 bet. Do I like Delta? Sure, but this isn't going to influence me. This isn't going to confirm or deny, you know, what's going on. Have I been recommending VFF? Yes, but my point is, I'm looking for option flow that's going to support my thesis of a chart move, and those are some of the resources that I use. Spot Gamma for market direction, VigTech for all kinds of option tactics and flows across all asset classes, and then Sang Lucci for specific hits. In other words, what they're buying, you know, that particular moment, because it is in fact a sentiment tell for me. And is it lots of little peppered, you know, option buys and sells, or are they big honking orders like, you know, 5 million for Tesla and, you could see that accumulation of volume. If you sort on that, it'll help you get a really good read for what dealers might have to do in buying to cover when the call buying, for example, is unrelenting. So NIO started the EV fire, and you know what I'm talking about as far as the whole movement that Tesla, of course, started. But recently, the Chinese Tesla caught the buzz in early October. I mentioned it to clients that this was getting really strong, and I'm not even talking about a fundamental case for NIO. I know there are diehard fans of this whole movement, but it literally last week. So I remember one week back in October, remember we're November 23rd, back in October, it traded 1.4 million contracts in one day. Okay, it was around 30 bucks. It's now $55. So the fact that there were more and more people coming into NIO in buying calls has created this euphoric, move. And people they sometimes confuse the justification for a move from just the plain old requirement that dealers are buying more stock, to cover. And this is just not necessarily understood. So I'm really trying to kind of explain this. And then here we are just last week. Do you know how many contracts were traded in a single day for NIO? 3.5 million. 3.5 million in NIO in one single day last week. And you can take a look at this chart, right? And you can see this is just incredibly persistent. This is the 10-week. Breakout, pullback was shallow, breakout. We just went through all-time highs, $55. You can see the volume. I'm not talking about open interest, which is, in and of itself, the top 3 strikes are actually puts. But the point is, this is hundreds of thousands, collectively a few million contracts, and you can see they're chasing. So that's my point. At some point, this is obviously going to reverse. Citron has come out, not obviously, but has come out and said, hey, Solo's worth like $1. Okay, it's moved up too far, too fast. And there are lots of other plays like that. I did this list for clients I call them EV playas, because there's not really justification for a lot of these, but they're a lot of fun to go in and create. First of all, I like to create a list of stocks that are within a particular theme in my trading room, and then I can size them up technically, because fundamentally it's not really sustainable what's happening right now. So could they turn into something? Absolutely, but this is too much, right? And then typically it comes back in. Fuel cell, for example. Now this doesn't have options, but fuel cell does. And for a trade that used to be like literally spotted this here when it broke out of the wedge at 350, it went to 9, closed at 850. This didn't even have a market for options. This was an illiquid market for options. And then they started coming in here like mad, driving the IV up, which is implied volatility, right? So this is doubled. The underlying is obviously exploding. People are excited about this concept. I'm not telling you that the theme is going away. No, I can also say that, hey, this has been in a downtrend. It has done a nice job of basing, right? And now it's exploding higher. It likely pulls back, and then we'll see. But it's still like a penny stock. It did a 1-for-12 split. What is this? IDAX, whatever. Gorgeous setup. Looked really nice for higher. But honestly, this used to be, an art supply company that turned pay-per-view, that turned crypto coin, that's now pivoting to EV. Be careful. They're fabulous chases, potential short-term swings with not a lot of skin in the game to play, but they will revert, and shockingly and painfully. But some of the bigger players like NIO, like Tesla, even PLTR, which is not, related EV, you could see the option flow coming in really strongly. So I just wanted to kind of show that once NIO started the EV fire, then, oh my goodness, this just started taking off. And if can like ignore this stuff over here. Just, I know it's really busy, but you know, these are EV plays somehow related. It could be a really big stretch. Okay. It's a long list. Candy was one that I recommended early. At least I knew that one, you know, it had a decent shape as well. It was above, it had already done this, you know, craziness, and then it had gotten back up, you know, so there were actually technically some plays that looked really nice. BLNK, saw that when it broke out at 11 in my trading room, had no expectation it would go to 33. Zero. Zip zero. Less than that. But, you know, the 200, sure. That looked like in time it would be at the 200. Not in 1 week. We're talking 5 days here. So the point is, this is what happened. There's now puts coming in. This is very interesting to me because this is looking done. So I want to see now a formation where it actually tops out and comes back down. Intramarket, not so much. Short covering, that's a big deal. That's what drives these higher as well. So some plays in this, you know, EV sector started out with NEO and just went higher, XPEV, and you could see it in the flow. Tons and tons. LI, tons and tons. Now they're starting to quiet a little bit. You know, some of these are, and some of them are starting to come back. That's what I'm looking for that rotation off. So we had the rotation on. Now I'm looking for the rotation off. Okay, so that's how that works in regards to option flow for a single stock. And the EV plays as a sector, ginormous inflow, NEO, LI, XPEV were the absolute tells, and then all kinds of other things started percolating. And it's what I love about trading is you can see when the sharks start to smell blood. It's just a feeding frenzy. And that's what happened with the EV plays. All right, but this is one that didn't continue. Remember I showed you the August gamma chasing in the FANG names, Facebook, Amazon, Netflix, Google, you know, NVIDIA, yeah, Tesla for sure. Okay, I don't know if you can highlight, if you can see this space over here, okay, but this is what happened. It got all the way up here. And one recommendation I actually had for institutional was to sell calls because they were extremely elevated. So the gamma buying, which beget buying in the NASDAQ in August, which topped out on September 4th and then reversed, was actually a better place to sell calls if you're into that strategy because they were so elevated. Now take a look. This is what's happened, right? This is NASDAQ 100 right here. And this is what's happened with that whole gamma flow has just collapsed. It got euphoric and it came right back down. So maybe those plays haven't rolled over so much. You know, Apple's 114, it's not 125, but it was as low as 105. So it's my point is FANG fizzled and the EV plays obviously took off. Value rotation, we had a 10 standard, a 10 sigma deviation move in that rotation between the FANG big tech and the small caps, the oversold sectors, materials and energy and you know, banks, all of that. This is just one way to kind of see when you have the wind at your back. So in this particular case, no more FANG higher. It's a theta decay killer, meaning calls are going to decay very quickly. Tech leadership earlier in the year was fueled by call option activity, triggering that gamma squeeze, but no more, right? So that's why actually small caps are relatively much stronger than the spiders because FANG makes up a big percentage of the SPY and 43% of the Qs. So that's why those are soft and small caps right now are incredibly bullish. So FANG fizzled, value vaulted. Value vaulted is basically, think GE. Now, I got to show you GE because this is fascinating to me. And XLE, I just love these plays. So GE has traded more calls in recent weeks than the past few years combined. And XLE, we just saw a trade. I got to show you this one. Hold on. I don't know if you can see this. Nah, you can't see that. Give me a second. Is that XLE? Okay, hopefully you can see this. Okay, I grabbed XLE last week, okay, on the 18th. I noted January in XLE, we'd already gapped up. We're moving. It looks great on the weekly, the day, the hour. It's kind of a big surprise. It's already gone to the 200. We have a little, you know, pause potentially. I don't know what oil's going to do. I'm trying to figure it out with my intermarket, but man, oh man, look at option flow. Somebody came in of size. Can you see the 51,000 contracts, or let's call it 50,000 contracts? I'm guessing this is a call spread because it's an equal amount of option contracts, 50 and 50, 34 by 38. That's anyway what I recommended to clients. Okay, now take a look. Can you believe it? That puppy moved from the 18th, which is right here, from literally 34, it hit a low, 34.81, it's already past 38. That call spread is already in the money. So that is what I mean by option flow is already showing us, if you will, the way here. And they're not even chasing. They could do a weekly like Tesla and NEO. They're not. This is more, let's just say, a conservative play to do a January 34 by 38 call spread, because you have until January to hit 38. Well, guess what? They hit 38 in 2 days because this structure is so bullish. They're buying the 45s now. That's the leading strike today. All the Decembers, right? More. Now, it doesn't mean it can't pause. It did that, you know, bearish engulfing, kind of, sort of, didn't even tag the 8-day, got right back up, and here's the 200, and then shot higher, 39, you know, 40, 42. This is where we were back in June. Okay, this was the May rotation, and we had a big reversal. This happens to be the 30-week on a weekly. We had, you know, just blah, 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 and then boom, it shot up on that fateful Monday when Pfizer announced their vaccine. So that is, again, kind of another tell of this trade does not look done. And I remember talking with a colleague about Exxon, and this is also, you know, continued bullish. They got a little bit that they're chasing, but this is positioning. So what I'm looking for is I'm looking for this weight of the evidence that they're bullish or bearish, that there is confirmation with the chart, that the market also supports that rotation theme, for example, or higher, because we're talking small caps, and that the option flow is hitting it every single day. So that is, oops, sorry. One example, GE. Oh, I got to show you the GE one, and XOP. So XOP is also related to oil and gas. There's XLE for the ETFs, OIH, XES, and XOP. Well, XOP has had some bullish positioning in it as well today, and sure enough, has had bullish continuation, and sure enough, the option flow, you can see it's up 9% again. The GE has been fascinating. I mean, I just think this is so cool. January $10 calls started coming in about a month ago, and it actually was up to 700,000 calls. They've taken some off as this has reached 10. So when this basically exploded higher, and even a little bit before that, the January $10 calls were coming in. So if you were in my trading room, you would hear me constantly say, oh my God, they just got hit again. And that meant GE $10 January calls. You could play a much better strike. You could play a call spread. You know, you could got the stock. But the point is, my thesis was it broke out. It's moving higher. Now it's into a monthly reversal. Let's see what it does. But from this breakout, from basically, my first thing was anything above 666, forgive me, that was, you know, coy, but it really worked. Anything above 666, and then this breakout above 750 to 10, we're now at 10. So now I'm actually, oh, sorry about that. So what I'm actually looking for now is puts to come in because we're up to monthly resistance. There are no puts coming in. Look at the volume, continuation. They're chasing. This is January $12 out of the money strikes. This is the January $10 strikes. This is March. They want this higher, right? I still think we probably could have a little pullback right here, you know, and then move higher. But the point is, option flow in this single stock is gamma positive. Buying begets buying. Contracts continue to build, and value is vaulted higher in these rotation plays. Pretty cool. And then just today, you know, just as kind of a closing, and then I'll take any questions you have. More Tesla, I mentioned today. You know, they may be wrong, but the point is, large bet, $5.14 million bet for the 500 calls. That's in the money, right? Because it's now about 525. December 24th. So we're talking about right at the end of the year. PLTR, are they done? You know, so that kind of buying is still underway. For my clients, I do my intermarket analysis to show when we're going to have volatility enter. And right now, the option flow, I'll tell my clients, you know, if I see a turn, you know, volatility, the indices, market moving news, but right now in the single stock option buying arena, it is still bullish, as shocking as that will be. And I absolutely expect some wild moves lower in the EV plays, the NEOs of the world, and some of these SPACs you've heard about. But my job is to tell clients when I think it's safe and when it's not. That's really my one job. So I'm using all this, you know, knowledge of the markets, market structure, my own, you know, read, if you will, on the macro, the sentiment, the technical, the intermarket, the fundamental, the quant. But ultimately, I'm basically letting clients know when I think it's safe. And right now, it's been a very bullish backdrop. I have not seen a rotation. That's gonna, it's gonna appear, but for right now, without sentimentality, without any models per se, I'm sizing up the opportunities in context from the data that I'm getting, that I relay to clients in my live trading room, that I relay to clients in my brokerage-triggered trade alerts. So when I place a trade in Interactive Brokers, clients know it. And basically using my mom radar. That's basically how I do it. So you can find me on Twitter. This is my handle right here. I have LeducTrading.com. I have LeducTradingEdge.com. I have a YouTube channel. I am really hopeful that you can sign up for YouTube. That way, if when I do not only a guest captain interview, but also my own, like this is from the last time I did a presentation here. When I do my own review of stuff for free, I will post it here. I do have this website. You can also come on in, and I have the guest captain interview series. You can sign up for free bait, fish stories, and the rest. Yes, I use the fishing theme. And hopefully you'll join also the captain interview series, because this is where I talk the flows with Jonathan, who you'll get to learn a little bit about how he uses volume and rate of change and the rest for identifying flows. And it's very helpful to spy this stuff, because it does help me to time very, very well, I might say, tops and bottoms, but also continuation. So this is my presentation on Thanksgiving week, in hopes that it helps, maybe educate a little bit. I gotta thank you. Someone just signed up for YouTube. Let's see if I have any questions in here that I didn't quite grab. That was a minimum. That wasn't for me. That was for Adrian. Okay. I think you got that. Buying and selling calls, as far as at a basic minimum, you definitely need to understand that and add time. So a lot of people will go way too short duration. Again, these weeklies that could expire worthless. Add some time. So it's honestly a struggle for me too, because I want to catch that volatility so desperately, but I'm doing many other things, and it's much better to have duration on your trade. If you know advanced options, yes, you can sell calls, sell puts, do finance call spreads. They take a bit more margin and finesse, and defending, you got to know how to defend them because they can go against you. If you're just doing a directional call or put, then it will expire worthless. You are risking what you bet. In other words, don't risk more than you're willing to lose. Thank you for the feedback. I have, okay, so this is basically my services in a nutshell. LeducTrading.com. I have a monthly and live trading room, Brokerage-Triggered, all my analysis, videos. This is annual, and then this is for institutions. It's a little bit different flavor for the institutions because they're much more focused on fixed income and interest rates, and usually retail isn't so into that. So I keep that separate, and they get some customization as far as calls and such. So I hope that helps. Thank you, David, for posting my Twitter address and my YouTube. Oh, you're a doll. Thank you so much. And yes, if you want to just check it out, you're also welcome to come in for a trial membership. I have a week to check it out. And I don't think, you know what, James will do a promo. Anyone who has signed up for this presentation that we get from David, I think it's 20% off the first month. Forgive me, I don't do the marketing. I'm very focused on analysis, education, and trading. I do these interviews, which I really love to do. And I'm building an app also on the VigTech platform, which is why we're in cahoots together, because I have 3 products, indicator sets that I've used with clients for years that are going to be built out and made available, both on a chase, swing, and trend time frame to keep folks on the right side of the trade. That makes sense. Long story short, it is $350 a month, and it comes with live trading room. You can kind of see over here. I've got a live trading room. I actually have an exercise class that I got my personal trainer to do a little stock fit thing. My indicators that I use, one of my indicators that I'm actually going to have built out, much more sophisticated for clients to use, that's real time and on their own. Lots of writing, newsletter, phishing plans, videos, the institutional product, the brokerage-triggered trade alerts, and that's what you get for the $350. And I'm sure there's a coupon in there somewhere, but I didn't grab that.